Good morning, everyone. Welcome to our live session of Daily Market Outlook from Windsor Brokers. Today is Thursday, 26th of July. We are close to the end of the month with, again, some positive tone established yesterday, especially on the single currency after comments of Austrian Central Bank Governor Novotny, who said that could see arguments for a possible banking license for the ESM. And it's interesting that ECB President Draghi had earlier opposed this idea, but market reacted positively to this statement, and this positive tone still exists on euro after bouncing yesterday and covering the Monday's gap that appeared on Monday's opening, hitting so far 121.68. That was the high of yesterday, with the Draghi again due to speak today and being in focus. He's due at 9:30 GMT. A negative tone still dominates on the dollar yen and the sterling dollar, as the dollar yen holds just above initial support at 78.00, while sterling after losing 155 handle and cracking 154.60 initial support sees more perspective for further easing and a possible test of a key support at 154. That would be signal for a major breakout. Good support was seen for commodities as oil and gold bounced higher, with the investors anticipating more stimulus in U.S. measures to support the growth, and also on fears that tensions in Middle East could escalate and cause the supply concerns. As said, the gold bounced higher and they regained our break point at 1600, briefly breaking above, and this morning holding above this level. It's currently at 1604, with the highest traded yesterday seen at 1610 per ounce, while crude oil bounced off its yesterday's low at 86.85, however still holding within the range of and now lowered the floor at 86.85 and the upper side at 89.33, seeing a bit more potential at this point for a further recovery, as it is in the short-term downtrend of its recent peak at 93.22. More things from Spain that still looking for solution of this. It doesn't get much worse than now, but Spain borrowing money is looking like a lottery. We're talking about something else, and I was just looking at my notes. Anyway, before we see this, let's take a quick look at today's calendar, as again we have some important things to be released. The day started with Germany consumer climate that came as expected, 5.9, and slightly higher from July's release at 5.8, while import prices dipped by 1.5% versus a more optimistic minus 0.8% forecast and minus 0.7% of June's release. Still to come, US Eurozone M3 money supply due at 8 o'clock GMT, 2.9%, no changes from the previous release, as well as EU private loans. More interesting from after America's opening, unemployment claims as today's Thursday are due at 12:30, and slight decrease from previous weeks. 386,000 new claims is forecasted at, for today at 381,000. U.S. durable goods orders are also due at the same time at 12:30, with the monthly release for June forecasted at 0.4%, lower than May's release at 1.1%, while the core orders are due at forecasted at 0.1% compared to 0.7% of release of May. And the pending home sales for June due at 1400 GMT. Today's forecast is only 0.8% compared to good one at 5.9% seen in May. Later in the evening, basically at the same time, the Treasury Secretary Geithner is due to speak, and later on at the end of the day, basically due to GMT, it's the end of the day, by our local time, it will be already the next day. Indicators from Japan, the CPI from Tokyo, national core CPI and retail sales are due at 23:30 GMT. That will be already, according to our time zone, already within the new day. And a quick look at the markets to see the latest movements and the expectations for today. As said, the euro is maintaining its positive near-term sentiment after hitting a fresh low at 120.42 2 days ago, with yesterday's bounce higher, regaining some important levels. 121.43 was the previous high posted on Monday, and also covering the gap of Monday's opening with 121.68 seen so far. Currently consolidating the latest gains, moving within 121.13 and 121.68 range, with still possibility seen of further extension higher, despite that hourly studies are slightly losing traction. Basically, we need to see break above 122 level, that is close to 61.8% retracement. I think we see it better on the it's close to 23.6% retracement of the larger 126.91 to 120.42 descent, also reinforced by descending 55 days moving average, and a break here is required to confirm the near-term base at 120.42 and allow for some stronger recovery, with the key barrier on the short term seen at 123.20 zone. That break of which is basically the one that will sideline the short-term bears and open way for stronger recovery. Any failure under initial 122 would turn immediate focus lower, with the basically break below 121 required to refocus levels on the downside at 120.42 and 120.00. As a larger pictures outlook remains firmly bearish, and the pair continues to point towards our initial target at 120.00. And the current bounce is so far seen corrective. I would say failure under 122 would be just a signal for a lower top and fresh extension, while break above 122 might be a signal for delay and the further retracement. As mentioned, the 123.20 is the key short-term barrier, and only regain of these levels would be more supportive for the single currency and prevent it from a fresh weakness and possible test of psychological 120 support. As said, for sterling, it lost ground after losing 155 and 154.60 that has been cracked yesterday. 154.57 seen so far, rather neutral mode seen on the near-term outlook, as hourly studies are currently neutral. The pair moving sideways, but still the tone is aligned towards the downside, as immediate cap stands at 154.87, whereas the 20 days exponential moving average, with the wider range being limited by 55 days exponential moving average, currently at 155.06, just above our psychological barrier. Break above 155 and the more significant 155.50 that marks near-term range top would put near-term bears on hold for possible further retracement of the latest down leg from 157.36, where the pair failed to regain 200 days moving average as a strong barrier at 157.50 zone, and subsequent sharp reversal tended focus towards the downside. A more perspective is seen for further extension lower, as daily studies are again into the negative territory. Just to take a brief look at the 4-hour chart, where the indicators are in the negative zone, with the more with scope seen for a further extension lower. We have below 154, pardon, 57 yesterday's low. We have the short-term trend line, bull trend line of 152.67, yearly low posted on 1st of June through 153.92, 12th of July low, currently standing at 154.33, ahead of the most important short-term support at 154 zone, a low of 12th of July, also low of 8th of June 2008, and a break of this that also marks the floor of the short-term range of from the beginning of June until now would be signal for major breakout and open way for fresh phase lower, with the main focus seen at 153.54 currently. This is the long-term trend line drawn of 135.01 2009 low through 2010 low at 142.30, and this is also acting as very strong support along with the 154 zone, and as said, break below these levels would signal the major breakout and the open immediate support at 152.67 low of 2012, and the 152.67 low of 1st of June 2012, and the low of 2012 at 152.33 posted on the 1st of January. As said, more negative action seen so far, unless we see the regain of 155.50 and the more significant 156.00 that will confirm the near-term base. Otherwise, any failure under these levels would be signal of lower top and fresh extension lower. The dollar-yen remains in the rather neutral mode, despite rumors that were spreading in the past couple of days of possible intervention of by Japanese central bank, with the range narrowing on the downside. 78.00 holds dips so far, and the upside seen capped at 78.20-30 zone, with the tone still holding more negative elements as the price action remains limited by descending 55 days moving average as shown on the hourly chart, and more focus seen towards the downside. Immediate support and target at 78.00, loss of which to open way towards our key support at 77.00, 77.93, and the key support at 77.65, low of 1st of June 2012. Loss of which is to confirm the larger picture negative structure and the signal extension of the broader downtrend from 84.17, 15th of March 2012 low. As the pair lost 200 days moving average at 79.00, this now acts as a stronger resistance. This is also previous range floor and previous strong support now reverted to resistance, and the only regain of 79.00 would improve the near-term, short-term structure and the open way for some stronger action higher. Until then, as long as 79 holds, the upside more negative tone sees the pair under pressure and the possible extension towards the previously mentioned level 78.00 and the 77.65. Interim resistances 79.15, 79.40, 79.15, and 78.27 and the 78.45 ahead of 78.79. That is the last barrier on the way towards 79.00. On the downside, immediate support is set 78.03 and the 77.93, loss of which to open 77.65 for retest. Dollar Swiss in a near-term consolidative mode after hitting a fresh low at 98.66. This zone so far offered the support, and this is actually our initial support, as this marks previous high at 98.71 posted on 13th of July, as well as close to 50% retracement of the upleg from 97.45 to 99.70, with the more possibilities seen of further retracement as the 4-hour price action is limited by 20 days exponential moving average, while hourly studies are well in the negative territory. And as long as initial barriers at 99.00 and then 99.10 stay intact, possibilities of further extension lower are quite high at this point. Immediate support 98.66 and 98.58, 50% retracement ahead of dynamic one at 98.49. So basically 98.50-70 zone offers quite good and strong support, loss of which would be signal that near-term bulls will be put on hold in favor of a stronger reversal. 98.31 marks 61.8% with 98.00 as a round figure support. A key level on the short term is 97.45, higher platform of 19th and 17th of July, and the only break here would trigger some more significant retracement of the broader uptrend, as daily studies are still firmly in the positive territory, but RSI merging of the oversold territory and the loss of momentum sees potential of further reversal and further correction of the strong uptrend, the big leg from 90.41 1st of May 2012 higher low, as the pair covered the Monday's gap. Possibilities of further extension lower are quite possible at this point, unless break above 99.00 and 99.50 is seen. More pressure would be seen on the downside. Break above 99.50 opens immediately 99.70 previous high, and our upside targets at 100 parity level and 100.46, where weekly 200 days moving average currently stands, as well as close to 61.8% retracement of larger 117.30 to 70.67 down move. A quick look at gold. Interesting is the point on the Ichimoku studies that yellow metal broke above the daily cloud top at 16.03. That also marked part of our very important 16.00 level. Currently attempting that touched actually yesterday 90 days moving average as the next barrier. Quick look at the near term. The consolidation follows the yesterday's extension to 16.10. That was the peak, with the dips being still held above 16.00. 16.01 was the low seen so far, with the more positive action expected to extend the current strong rally of 15.68 and 15.63 lows of last Monday and Tuesday. Hourly studies are now correcting from the overbought territory. We might see some stronger corrective action preceding a fresh rally, with the levels to watch. Immediate dynamic support 16.01 along with the range low comes first, again ahead of 15.99 at 23.6 retracement. More significant is 15, as we can see, 15.92. That marks 38.2% retracement. Previous high of 19th of July, as well as 55 days exponential moving average, and any further easing should ideally be reversed at this point in order to keep the short-term bulls intact for possible for extension higher. On the upside, clear break above 16.10. That also marks 90 days moving average. Will open next target at 16.24. For now, only loss of our previously mentioned support at 15.90 zone would delay, while break below 15.80 would focus towards the downside. And a quick look at Aussie dollar that regained ground again after dipping from 104.43 peak of 19th of July, that retraced approximately 76.4% at 101.75, with the key support at 100.99 staying intact for now, and the fresh rally pardon, higher, regaining some important barriers. 102.80 I do apologize. 102.80, the 200 days moving average, and the previous high at 103.26 have been regained with a positive tone dominating on the short-term outlook, and seeing potential for a further extension higher. The Fibonacci levels to watch off on the latest down leg from 104.43 to 101.75, as the pair currently attempts through 103.41, 61.8% retracement. Clear break here to open, to turn more focus towards the upside. 104.00 and 104.43 seen as immediate targets, while downside seen well protected at 103 zone, where bullish crossover of 20 and 55 days exponential moving averages underpins the upside for now. And I would say loss of 103 would be delaying current bulls, and would risk with break below 102.60 to risk lower top and further extension lower. For now, the still a positive structure sees more potential towards the upside, but as said, a regain of 104 is important to confirm the short-term bulls, and turn the focus completely higher, and for possible retest of 104.43 as a larger picture, and uptrend from 0.9579 1st of June low still remains intact, with bulls being reinforced by break above 200 days moving average at 102.80. Questions and answers now. I think we covered the subjects for today's presentation. Please submit your questions if you have any question in written, and I'll be glad to answer. Dollar Canada, we did it yesterday. We're gonna take a look again. Okay, near-term action is still negative, as the pair continues to move lower of 102.30 peak of yesterday, with the support being found so far at 101.37, between 50 and 61.8% retracement, and a brief recovery seen yesterday from 101.37 being limited at 101.64. So nothing significant happened with current action retesting, actually hitting exactly the previous low. Negative indicators in the negative territory, however overextended and approaching the oversold territory on RSI, on the hourly RSI, see potential of a possible, I would say, bounce, but still a more negative tone. See no clear signal yet of any reversal, with more negative tone putting additional pressure, as the 20 days exponential moving average crossed below 55 days one, and offering immediate barrier at 101.59 ahead of 101.70 55 days one, and holding below these levels, more potential is seen towards the downside, with the loss of 101.37. Looking for 101.28, 61.8%, and 101.00 as a round figure support. I would say at this point more negative tone on 1 and 4 hour charts, see more potential towards the downside. As said, only break above 101.50, 60, 70, and 102 as a lower top of 25th of July, yesterday's intraday high, would turn the focus higher. Until then, I would say that more focus is seen towards the downside with the break of this near-term critical support at 101.0137 required for further extension lower. Do we have any other question for today? It seems not. Okay, if no questions, it seems that we covered the most interesting things for today. As said, be with the trend always. That's what I like to say. Follow the trend and you will greatly reduce any risk. We're back tomorrow morning at the same time for the last day of the month, Friday 27th of, pardon, it's not last day of the month. We have on Monday. However, last day of the week, Friday 27th of July 2012. We are back at our usual time at 7:00 GMT. Until then, I wish you a nice day and a very successful trading. Good luck.